Hello friends, this is Raj Sastry from Raj Option Trading. Today is December 13, 2021. Let's look at stock and option trading ideas and go from there. We'll do a quick market update, look at buying stocks or buying call options using TTM squeeze indicator, and let's look at buying stock or buying call options. And let's also look at buying stock or selling put option, and let's review a few charts and go from there. With that, let's jump in here. So from a market update perspective, on Friday we had a nice rally in the market despite of high inflation numbers and CPI number. Market rallied. So at this time we're in a wait and watch mode for Feds. If Fed just increases by 25 basis points and keep the rhetoric low, then market can go forward and go higher. But if Fed gets aggressive and talk about multiple rate hikes, then market can come down and provide some good buying opportunities. With that, as you can see here, on Friday we had more advancing stocks here than declining, but pretty close as you can see here. So with that, let's jump in, get a quick market update from Thinkorswim and see how the futures are doing. So with that, let's jump in here and go to Thinkorswim platform. As you can see here, we got S&P 500 futures and they are trying to open a little bit higher here, 8.75. It was more higher earlier. And we got Nasdaq here. Nasdaq is up 63. That's a good uptick here. And we got Dow Jones struggling here. It was up nicely before triple digits. Now it's just up 5 points here, struggling a little bit. And then you got Russell 2000 also struggling, down by say about 0.5 points or so. It's also struggling to search for direction here. So with that, let's look at few ideas for the week and go from there. As you look through here, first let's look at TTM squeeze indication by John Carter. What we will do is really, there are a lot of stocks with TTM squeeze indication. We will go after the quality ones. Let's look at volume greater than 1 million shares. Low RSI tells you stock is sold off here, and low debt meaning stock is solvent, company is solvent here. They're not going to go into bankruptcy at all. And low IV percentile. When it's a low IV percentile, that tells you IV or IV rank is very low. And also using TTM squeeze, right now Bollinger Band is within Kelton's channel and there's a tight compression of volatility. Stock has to go up or down quickly. We will focus on stocks that are going to go higher. So with that, let's jump in and get started. From a stock perspective, we got short list here after combing through the big universe. As you can see, a very short list. We got Zim here, nice institution buy here, nice sales and net margin positive. And there is a squeeze in the 1-day chart, as you can see here. Nice volume is above 1.5 times normal volume. Then you got Coupang here. Coupang is a it's a South Korea name here. It's a nice e-commerce play. $26 stock, as you can see here. Volume is a little bit low, but has a nice 1-day squeeze as well as 3-day squeeze, and has done nicely within 5 days. That's a indication that this can also go higher. And then you got a few more here. Look, Twilio. Figs has got a nice volume here, more than twice normal volume, and has got a 1-day squeeze. Good. And then Twilio here. Twilio has been coming down off late, but finally managed to go higher in last 5 days, and it's got a monthly squeeze, as you can see here. So the moment there's a monthly squeeze, that tells you trend can continue for months. And we've got a few more, as you can see here. Also look at the ones with nice sales growth and gross margin, like Viva Systems. That's a good one to buy at these levels. Stock has been beaten down for a while now. And I also like Roblox. Overstock is a good one here, and few more. As you can look through here, few stocks have got nice short ratio here. Figs, and we got Overstock and Parts.com, which is a low price stock here. So with this, what we'll do is, as you can see here, we focused on stronger candidates here, and these stocks are more profitable compared to industry, nice financial position. I think that's why these are good candidates. So with that, let's jump back into thinkorswim platform and look at the TTM squeeze and see if you can buy some of these stocks or buy call option. So with that, jump in here, go to thinkorswim platform and bring up a few of these charts here. First, let's go with the one of my favorite here, Viva Systems. Many of you might be knowing Viva. It's a great healthcare information technology stock. As you can see here, stock has been going up and down. Right now, it's a nice support level here. It's trying to bounce off of its support level around 243, 250 here. I think it's a good play. As you can look through here, right now stock is trying to bounce off from a RSI perspective. It's below its 200-day, 100-day as well as 25-day, 50-day moving average here. That's why it's a good one to take a look at and buy some stock or even option. Look, we got DMI chart here, red line on top trying to come down, blue line on the bottom here trying to think through where to go. Right now it's completely bearish. That's why it's good to slowly start accumulating the stock itself or buy some call option. And from an on the balance volume perspective, right now it's negative. With the when the stock drops like this, it typically goes down, which is very well understandable. But on the positive side, check in money flow is flowing in here. That tells you smart money is flowing into the stock, which is a good indication. So with that, next we'll look at a TTM squeeze chart and see how is the TTM squeeze coming up for this stock. So with that, let's see if we have the squeeze chart here. All right, let's bring up a squeeze chart. All right, so we got TTM squeeze right here. All right, so we got TTM squeeze chart. We are looking at Viva Systems. All right, so as you look through Viva Systems here, we got a squeeze. Let's see here. We got a squeeze in a monthly chart, as you can see here. And when there is a squeeze, what we need to look at is we got to look at the longer term C wave squarely above zero. This is the zero line right here. It's squarely above zero. That tells you coast is clear. Go buy Viva or you buy the call option. Even though we got a little bit say dark blue bars here telling you it's a little bit weakening here, but given there is a nice it's above zero, you could slowly start initiating some position in Viva and go from there. So with that, let's go into option chain for Viva and take it from there. All right, so Viva, as you can see here, right now IV percentile is very low here, 27%. That's one reason we are looking at buying the stock or call option here. And look here, PC ratio is 0.52. That tells you there are more call option buyers than put option, more call option traders than put option traders. That's a good news here. So with that respectable volume here, that's a good good indication. So with that, we can jump in here. If you are a stock buyer, you can initiate a buy for Viva here. It's a great stock to buy. I think that will do very nicely. But if you're a call option buyer, you could probably go a little bit out here. Maybe 17 June will work here. And you could go here and you could buy Delta 70 call option here. Look, Delta 69 is good enough. You could pay around $43 and buy this call option. And as long as stock stays about 283 by 17 June, you will break even. This is one way to play. As the stock goes higher, you don't need to pay $265 for this stock. Instead, you'll buy call option just for say here $43 or so. 43.70 here. That's the beauty of call options. It's a leverage game here, and if the stock goes in your direction, you'll make money. But if the stock goes below your break-even point here, 283, you will not make any money. That's why it's a double-edged sword here. That's why some people are attracted to call option buying, because if stock goes in their direction, they can make good money with a smaller amount of capital. So this is one way to play. But if you want low risk approach here, you could play a spread game here. If you want to spread it, it's $265 stock here. You could go in and out spread, as you call it. So go around, so let's see here, 265. You could do 250 to 260, 270. That's one way to play. You're putting just $10 at risk here, and you still participate in the upward momentum of Viva. And that's the one way to play here. We can go here and buy a vertical spread, 260, 270. You're paying $4.90, but your profit potential is remaining portion of $10 spread here, which is $5.10. You're more than doubling your money. So if you confirm and send here, as you can look through here, you're paying 490 to make 510. That's a good doubling your money proposition here. And your break-even point is below the current stock price. That's why it's a conservative strategy. Your break-even point is 264.9. You want stock to be about 264.9 by 17th June 2022. That's why it's a conservative strategy. You could go ahead and send this, and you'll double your money if it goes your way. At the same time, you don't risk too much money because your max loss is just 490. With these spread strategies, only caveat is your profit potential is capped. Even if this stock goes to 300 or 400, you will always make 510 and not more than that. So that's one of the caveat of this spread trading, because it's there is a cap on the profit potential, unlike buying call option of the stock outright. So I would say if you have money, or if it's for long-term trading, you could buy stock outright and sock it away. Viva is a great stock. We'll look at one more stock and then go from there. Let's look at one of my favorite here, HOLX. So this one also has a TTM squeeze. It's a HOLOgic. It's in the healthcare area. Let's look at few charts here. So HOLOgic, as you see here, stock has been oscillating up and down. That's what we like about these stocks here. Right now it's trying to search for direction. RSI is around 52, not too high, not too low. And look nice on the balance volume here. That's a good sign here. Right now, from a DMI perspective, it's turning positive from a DMI perspective, with blue line on top, red line on bottom. There's a chance that red line might cross over. Very hard to say right now. That's a bearish crossover if it happens. Check-in money flow is pretty constant here. So with that, let's look at TTM chart here, see what's going on. From a TTM chart perspective, we got a squeeze in the daily chart. When that happened, look, longer term C wave is above 0, shorter term A wave is also above 0. And we got here a squeeze in the 3-day chart here. When that happened, both shorter term and longer term waves are above 0. And we got a squeeze in a monthly chart. When that happened, look, short-term wave is below 0, minus 0.26. Longer-term wave, C wave, is squarely above 0. That tells you go buy a HOLOgic or buy call option. So with that, let's jump in here and look at HOLOgic. Look at the option chain. Look, stock is at 74. All-time high is 85. If you have some money, you could buy this great stock here and sock it away. And if you want to play options game here, you can go to option chain, look at delta 70 here. Delta 75 works. You could go here and buy delta 75 call option. Look, one thing I noticed here, PC ratio is 1.25. There are more put option traders than call option traders. That's why ratio is greater than 1, which is okay. Sometimes if the ratio is high, it tells you, some of these put option buyers can get crushed. So it's sometimes I even take the trade even when put call ratio is high as a contrarian. So with that, you could go here, delta 75 works. You could go here, buy call option and pay $13.50, confirm and send. So look, we got here break-even point is 78.50, a little bit above the current stock price, and our expiration date is July 17th. If the stock goes above 78.50 by July 17th, which is a long way ago, you'll make money. Otherwise, if it goes below here, you'll start losing your money. Actually, you'll lose your money. So this is a good proposition. every dollar the stock moves, your option will move by 75 cents. That's why delta is 75 as of now. This can change according to volatility changes and price variations, but it's the current expected movement in the option price based on the stock price. So with that, this is a good proposition to have. You could buy this call option and go from there. But if you're a little bit worried and if you want to do spread trading to reduce your risk, you could go with the spread trading. Stock being at 74 here, you could do 70-80 spread. So you could go here and look at 70 spread, 70 strike. You could buy a 70-80 spread. That's again a good strategy. So 70-80 here. So there you go. So you are basically buying the call option at 70 strike and selling the call option at 80 strike. You want to participate in the movement of the stock between 70 and 80. One reason I like this spread trading is typically stocks move around their current stock price. They will go a little bit higher or a little bit lower. That's where the movement is. The moment you do spread trading around the current stock price, especially in out, you're buying inside the current price being 74, you're buying at 70, and you're selling outside of the current price, above the current price at 80. So it's a $10 wide spread. You're paying 480. Remaining portion of this $10, which is $5.20, is your profit potential. It's more than doubling your money. You could confirm and send. There you go. As you can see here, more than doubling your money. Pay 480 to make 520. Good proposition here. You could confirm and send this. It's a great trade. Look, your break-even point here came below, just at the stock price here, 5 cents above stock price. It's a great conservative way to play here, and you could confirm and send this one. And let's look at one or two more strategies and go from there. Next, you could look at all these names here, all great names to buy the stock outright, or you could play the options game like we talked about, buying the option outright or a spread. And next let's look at buying call or option, but this time it's not with the TTM squeeze indication, but we look at other powerful indications. Look, we look at volume greater than 1 million shares traded, low RSI, meaning stocks are right now down, pulled back nicely, low debt, meaning solvent companies, they're not going to be in a financial trouble anytime soon, low IV percentile, meaning you don't need to pay too much option premium when you're buying call option, positive sales growth, positive gross margin, and growth is better than industry, and profitability is also better than industry, and financials also, and quality is better than industry. That's one of the reasons these make great candidate. Buy the stock outright or buy the call option and go from there. And as you look through the list here, all these stocks have got great sales growth and great gross margin. That's why they satisfy rule of 40 handily. As you can see here, all great stocks here. You could buy them outright or you could buy call option. And net margin, all these companies are making money, net margin positive, debt to equity ratio low, meaning they don't have too much debt here. And as you look through valuation, the PS ratio here, and most of these are below 10 or even 5 at many times, with the exception of Tesla, which is what can I say, Tesla is Tesla, a little bit high valuation but not too high, so pretty low valuation for most part here. And look, there is a nice 1 year or a 5-year performance for most companies here. And with that, let's jump in and look at few stocks and look at ideas to buy the stock outright. You could buy all these names outright, or you could play some short, or you could buy some options, call options, and go from there. So with that, let's jump in here and we look at few examples. So one of my favorite stock of late is Moderna, MRNA. And many folks, it may be too high price for you to play Moderna because it's $257. So what you could do is you could do option game if you don't want to buy Moderna outright. Let's look at the chart and see what's going on here. Look, Moderna, great stock. Right now it's a little bit down here. There's a nice support level around 224 for Moderna. It's trying to bounce off of its 220 around 222, 224 support level here. And look, as you look through here, right now it's bearish with the DMI chart. Red line trying to go higher, blue line going to try to go lower here. And look, here check-in money flow is trying to go higher. That tells you smart money is flowing into the stock here. Volume average is a little bit down here, which is understandable. When the stock comes down, volume average also comes down here. On the balance, volume comes down. So with that, let's jump in and look at the stock or option buying idea. Stock is at 257, all-time high is 490, 497. Wow, it has got a almost 50% haircut here. You could buy the stock outright and sock it away as a long-term investment, or if you want to buy options game here, I would say you can even go 122 days out here. Look, right now PC ratio is 0.89. That tells you there are more call option traders than put option traders, and VWAP is 248. That tells you stock can come down a little bit from here. It's at 257, VWAP is 248, so you could wait for a little bit pullback and then buy stock or call option. So with that, let's jump in here, go 122 days out and look at the call option here. So if you're a call option buyer, you could do delta 70 call here. You could buy this spread here or this option here, pay $53 and confirm and send. You're paying $53, and as long as stock stays about 283 by 14th April, you'll make money. Many of you, it's too much money to buy a call option here. You could play a spread game. So if you want to do spread game here, stock being at 257 here, you could go around, say, you probably could do $20 spread here. You could do 250 and 270 spread here. Let's go do that. So 250, you're buying a 250 spread here, and let's see, you can do 250 and you could do 270 here. So buying spread, let's go here and vertical. So 250 and 270, it's a $20 spread, as you can see here. There you go, and you're paying $9.28 here, and remaining portion is your profit potential. So you're more than doubling your money here. And if I confirm and send here, as you can see, right now you're paying $928 to make $1,072, more than doubling your money type proposition here. Your break-even point is $259, just $2 above current stock price. It's a great risk reward type play, more than doubling your money. For a high price stock like Moderna, this is a strategy I use, so that way you don't pay too much money, and you don't just buy one leg because you don't know what will happen. Profit potential is capped at 1072. It's more than doubling your money. It's not unlimited profit potential, but it works well, and you could confirm and send and go from there. And let's look at one or two more and see what we can do. So let's look at one or two more here. And next, let's look at Amazon.com. Many of you may not want to buy Amazon.com because it's a huge dollar amount. I would buy this in a small quantity and sock it away. Amazon is always a good stock to buy. Look, 3444, 3444, big amount, and 52-week high is 3773, around $300. And let's look at the a chart here. Amazon.com, great stock. This also goes up and down nicely, good for stock trading, and even socking it away at the lower price here in your long-term accounts. And as you look through here, look, right now RSI is pretty stable here. DMI chart tells you it's bearish, red line trying to go higher. And look, check-in money flow. Smart money is flowing into the stock. A lot of these folks know, especially during the year end, they want to have Amazon on their on their portfolio. These huge hedge fund managers, ETF, they all want to have Amazon in their portfolio. That's why they're buying. Retail investors like us, we're wondering what's going on to Amazon. But look, smart money is flowing here. So with that, let's jump in and look at the option chain. Amazon.com, as you can see here, they're around $300 above the current price. So with that, we could go 122 days out. That's good enough. And let's look at 3444. You could buy delta 70 call option outright here. 74, 73 right here. You could go here and delta 70 good enough, you could pay $392 here and buy this call option, confirm and send. You're paying, you're paying around, let's see here, max loss $39,000 here, and your profit potential is infinite as Amazon goes higher. But it has to go above 3587, which is about $150 or so from current stock price for you to break even. It has to go up by that price, up to that price by 14th April 2022. So it's a great way to play. Every dollar Amazon moves, your stock option will move by 70 cents because it's a delta 70 call option. So that's a good way to play Amazon.com. But if you're worried about paying so much money, and then you can do option spread here. That's again a great way to play. Stock being at 3444 here, you could do a $20 wide spread in Amazon.com. You could go here and go 3440 as an example. Let's see here, 3440. So 400, 500, so it's $100 spread. You could do $100 spread here and go from there. 3440. Oh, it's yeah, I think that's a good strategy here. Or you could even do 3345 here. Let's do this spread here, 3400, 3500, and do $100 spread here. All right, so we are buying $100 spread here. There you go. We are paying $48. Now see here, we are not paying too much money. We are participating in this $100 slice in this Amazon.com here. You could confirm and send. As you can see here, our max loss is 4820, and our max profit is 5180, more than doubling our money. We want the stock to go above 3448. Amazon goes up and down violently. It can easily go above this price here by 14th April. It's a good strategy. You could confirm and send here. Your buying power effect, if you have a margin account, is 4820. So that way you'll basically borrow, or you'll draw down from your your available margin, which is available buying power, actually not even margin. So it's a good strategy for you to buy. But if you're a little more conservative, don't want to pay too much money, you could also do this spread here, 3345 and 3400. It's a little bit different strategy here. You could play that spread, pay a little bit less money here. So if you want to do that, 3445 here, let's do that here and check it out. You could buy this small spread here, 3445, 3400. You're paying $32 here, and if I confirm and send here, you're paying $32. 32. Okay, this is not a good potential here. I would probably skip this one. You're not even doubling your money here. It's not a good proposition here. Let's skip that one. So we looked at buying call options or stock. All these are great stocks here. You could buy the stock outright, or you could buy the call option delta 70, or you could buy the spread like we are talking about. Even stocks like Tesla, you could easily buy some spread. Don't need to spend too much money. And next, for you who want to buy stock or sell put option, we are looking at great candidates here. Volume greater than 1 million shares. Low RSI tells you stock is beaten down here. Low debt, high IV percentile means you can get some good option premium by selling put options. Positive sales growth, better compared to industry from a growth, profitability, and financial and quality perspective. These are good companies. So with that, these are the very short list here. You could look here, high IV percentile means you'll get nice option premium when you sell put options. My favorite is AMD. It's a great stock. You could sell some put option here. If the stock comes down, you could buy the stock outright. It's a great stock, has nice potential. And you got others like Vivo. If you're a little bit scared about Chinese stock, you could avoid that. You got PAGS, Brazilian stock here. Nike, great stock here. And we got Zoom, which is trying to zoom off late with all this scare about Omicron. In mode, one of my favorite here. Adobe is a great one here. With that, let's jump in here and Go to thinkorswim platform, look at one or two candidates here. Let's first look at AMD, which is great stock, legendary leader Lisa Su. There you go. AMD, as you look at the chart here, so as you look at the chart here, AMD has done nicely. Now it's trying to bounce off of its 200-day moving average. Look, RSI has come down here, trying to stabilize on the balance volume. Right now, from a DMI chart perspective, it's a negative crossover. It might come in a couple of dollars down, but it's good to initiate a small position here. Nice on the balance volume, tells you more buyers than sellers. Smart money is flowing into the stock. That's why check-in money flow is trying to go higher here with that great setup for AMD here. Let's go to option chain here, and it's a $138 stock. As you can see here, it's gone all the way to 164. It's got a lot of room to run here, and we could go 122 days out. If you want to buy stock outright, it's a great stock. I recommend buying the stock and sock it away in your long-term account. But if you want to play option game here, our stock being at 138, you could buy delta 70 call option here, right here, pay $23 and participate in the upward momentum of this stock here. You pay here 2320 here, and your profit potential infinite, and stock has to go above 148 by 14th April for you to break even. It's a good way to play here. Every dollar stock moves, your stock option moves by 70 cents. Instead of paying $138 per stock, you are paying $2,320 to control 100 stocks. Great way to participate here. So if you don't want to pay so much money, you could do a spread game here. Stock being at 138, you could probably do a $20 wide spread in this one. As you look through here, 138, so you could do say 130 and 150 spread here, which is a $20 spread here. So let's do that. There you go. So it's a $20 wide spread. You are paying $8.20. You got a lot of profit potential here. Look, you're paying $8.70 to make a 1130. Good profit potential here, and your break-even point is as you can see here 138.70, just maybe 15 cents above current stock price. It's a great way to participate in this stock here, and just pay $870 to control 100 shares. For just $20 slice here, and you participate, and you make a nice profit, more than doubling your money. A great way to play high price stock like AMD here, and go from there. And with that, we'll probably look at one more and go from there. And one more is Adobe. I love Adobe stock here. Adobe is a great stock, high price. That's why many retail investors may not be playing Adobe, but with the options game here, you could do that. So stock is at 854, all-time high is 699. 654, all-time high is 1699. I think it's a high price stock here. Let's go look at the chart here. As you look through, it's a nice stock. I love, they got a nice legendary leader, Shantanu Narayanan, and they want to be the creative cloud to help all the creative artists and professionals. Look, stock is a little bit trying to decide where to go here. Nice on the balance volume. Right now it's bearish, given red line is on top, but not too much. This can turn around quickly. Smart money is also flowing in. Coast is clear. Let's look at the option chain, and look, we got stock at 654, and we could go here by delta 70 call option outright. Right here somewhere, look, 70 right here. You could pay $83 and buy this call option, expiring in 14th April 2022. You pay here 8,350. Your profit potential is infinite. Stock has to go above 688, which is about $30 more by 14th April for you to make money. But from then onwards, as it goes higher than 688, you'll start making big bucks. And if you're worried about paying 8350 and potentially losing your money if the stock does not go above 688 by April 22, you could play a spread game here with the smaller money. So with the 654 being the stock price, you could really look at, let's see here. Let's go to 650 spread here. 650, you could probably do 645 and 665, $20 spread here, and go from there. All right, so we'll do a $20 wide spread, so you can participate in a nice $20 slice here. There you go. So we got $20 wide spread. You're paying just $9.83. It's more than doubling your proposition. You're buying a call option below the current stock price. You are selling a call option above the current stock price. It's a good conservative strategy. Confirm and send. You're paying 983 to make 1017. It's a good proposition here. Even if you don't have a big portfolio, you could still trade high roller stock like Adobe here and go from there. You could confirm and send. It's a good strategy here. So with that, what we'll do is we'll probably conclude. And for you who are the long-term investors, Adobe is a great stock here. You don't need to always play options game. You could just buy some Adobe and sock it away. So with that, thank you very much. Happy investing and trading. Have a great week, and please subscribe.